Welcome everyone to my new price prediction video presentation for STX cryptocurrency looking around December informations. So we're going to talk about this crypto that is slowly moving into the spotlight, which is something that we all enjoy seeing. As soon as the cryptocurrencies are going in that category, there is definitely a lot of attention brought to it, especially from these platforms like CoinMarketCap. So it's pretty much tradable on all these big exchanges. And if you're around the space of crypto for a while, you're definitely familiar with STX, which is actually one of a kind that constantly delivers. Now, what's happening on the chart side? What is the probability and the prediction for December 2023 is something we're going to discover in this video. Now make sure to subscribe to the YouTube channel for those of you that enjoy this kind of materials and like the video for more content. At the same time, if you value education, if you're serious about the business and think that by improving your skills you can improve the results of your performance, make sure to check out the one-on-one coaching with me. I do trade since 2014 full-time cryptocurrency, and I'm happy basically to share my knowledge in the way I function from A to Z in a complete comprehensive coaching program right here. As well, join my done for you trading if you think this is something interesting, and for you, we are working on no prior fee, only commission from the profits made. ChatGPT bot right there helping us, and we're performing. By the way, free conversation with me if you would like to find out more about those on Calendly. Let's get into the charts, guys. This is the most important part. Daily candlesticks right there. What are we looking at? Well, simply said, there is still an intact downtrending environment line, which is having a massive force. I'm measuring from the top until the very moment we're trading right now. There are 661 days of crypto winter, which STX has been going through. So this is not a joke, guys. This is a trending line that is opening the doors for the bull market cycle. It is a trending line which is making the difference, and it's forming the border between a crypto winter and the starting of the bull cycle. You know that there's gaps, we know that there's accumulation stages, we know that there's different stages and cycles as well attached to the main ones, but this is what makes the ultimate difference between something that we have been going on for a long period of time. 661 days, guys, is not a short period of time, and we are pretty much very near of a breakout. So this is a very significant video material that I'm putting out here for STX, considering the situation. Number one thing that we actually care about here is that the breakout is going to force us to push towards $1.2. This is basically a main target. It is an extremely strong supply level located on the golden pocket area, which, as you can see right there in the encircled area, has been rejecting us for a week continuously, day after day. This is something that you very rarely see, just like those charts right there, which STX. Now, this is still intact, it still has its volume attached, and it will be triggered at the time we have to deal with that. 1.20 bucks right there is the major level of supply that we need to fight with. At the same time, there's one level here which I would talk about, and I would be careful about this one as well, just because it's above the breakout point. And usually the breakout points enjoy playing with traders around, enjoy playing with their emotions, enjoy playing with users that are following the charts with their patience, because we have this specific anchored weighted volume profile resistance line. It's the top line. It's acting as a resistance in the way the market is structured. We have it slightly above the breakout top, right? So this is a little problematic out there. We have a 14% movement, which means that markets can break out but then retrace back to the line because of the resistance line located right there. So you need to consider that little path out there and not be scared if you find resistance right below the dollar mark, or slightly candlesticks will shadow into the dollar mark too. That's a round number as well for any cryptocurrency that is below the dollar mark and it's into the cents, tens of cents area. Breaking out of the dollar is an important mark. A very important mark for the community as well. Usually the marketing starts afterwards at a different scale, and there's people enjoying to buy into cryptos that have been pumped already instead of joining into the cryptocurrencies that are about to pump and have a much bigger revenue, a much bigger margin on their profits. So this is something I most likely disagree with, that you buy into a crypto that has already pumped compared to situation and alternatives on the market where you can participate in cryptos that have not pumped yet and they're about to catch up because of their delay type of market behavior, is something that, financially speaking, is not the most efficient and rational way of doing it. When you're investing around long term, these things are not really important. If you say that for the next 5 years I'm going to buy stacks, but the problem with long-term investments, and this is a little discussion right there, is that the crypto space with the technology inside is changing so fast that the new products coming out are always better. And it is, again, not smart to stick with something from today towards the next 5 years, because today the product that you're actually looking at is better than what you see in the markets, which is very simply, with an exercise of imagination and the way the reality looks like, the cryptocurrencies are constantly launched. There's new products coming out, and in less than half a year, there's going to be much better versions of apps, services, and blockchains out there. So people go into those. And if you're the only one trying to hold basically the bar and trying to hope that the markets will go, yeah, the older cryptocurrencies will perform as well, but always the ones that are very recently coming out, they're doing much better. That's basically how it has been for every bull cycle out there. So that's something to keep in consideration, not about stacks in particular, but about the whole procedure and the way you actually think about the principles and fundamentals of the market. So that's something, right? New technology, new services, new products, new blockchains will deliver much better numbers. People will go into those, and they're the ones basically offering a better return. So if you stick in something for the next 5 to 10 years, you're going to be outdated and completely set into most likely in a fog or a frozen place, right? Which is something that will not offer you too much flexibility out there. However, that's why I'm telling you guys, trading is basically the number one way to actually maximize your resources, whether you do day trading, swing trading, whether you are basically very slow in this process, you want to do it part-time, full-time. You need to know how to take advantage of movements in the markets, specifically on any crypto that is about to do a good movement. So as soon as we're trading below the line and we're still above the median line, the blue one, we're fine. That's great. The blue line is actually making the difference between the orientation towards bullishness or bearishness in the markets. You're either in the upper side or in the lower side of the indicator. Now, at the same time, we have the moving averages that are very healthy right now for continuing to push. The moving averages are sitting in a fork pattern with 200 days a little bit delayed out there, but it's still fine. But then you have the 20 days, 50 days, and 100 days performing very, very well. So we're happy about those to see them in this specific structure. It's a good tactic that we have been supported on 20 days moving average, and it's most likely squeezing against the bears right now. So we don't need Bitcoin to die in order to have a great December, which could push basically up to $1.20 right there, where we would have a huge fight to go on. If we get to the dollar mark and we retrace a little bit, we must react. It will be mandatory on the trending line. So we're going to trade above, right? Retrace back from the dollar, and you must react on that 80-85 cents mark without any other alternatives. There must be strong and enormous buying pressure going on at that level to make sure that you confirm the breakout and you don't fall below the environment trend line again. This is very important. Beautiful. That's pretty much all about stacks for December, guys. Numbers and the charts are looking great for a breakout. As soon as the breakout happens, we need to see how does the dollar act and aim basically quite quickly for 1.20. If we simply clear up the 1.20 mark, we're going to talk about levels situated at $1.8 and nothing below that as meaningful. Great, so that's pretty much all about, like I said, for those of you that are interested in becoming serious about this business, taking advantage at the highest level possible and prepare the weapons for the bull market. Get yourself from the moment you still have time to prepare in a educational program, one-on-one with me, where I'll take you by and then teach you how to trade. As well, in the meantime, you can have the commission-based, no upfront fee, only commission from profits made. The commission is paid by you every 7 days. We perform the trading for you through API trading permission, and it's completely outsourced. Make sure to reach out to me on Calendly, subscribe to the channel, and like the video if you enjoyed this. We talk to you soon. Have a great time.